The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Basil Chapman here on this Thursday before the Easter weekend and Good Friday tomorrow. The Dow at this particular point, well, first I'm going to start off with Bitcoin is down 55 at 84,480. That's the chart I've got. You can see on the left side, it's just broken above the Chapman Wave Inside Track repellent zone, trying to get above. I'll treat this as a technical Friday. The weekly chart, 9-period moving average is weak. The MACD's weak. Stochastics flat at 22%. On-balance volume is very weak. But the monthly chart is still holding very well. So let's just go to our story. So within the context of everything else, let me just start off with the Dow. So Tommy O'Brien in his show had a really good articulation of why the Dow is different to the others. You talk price weighting, talking about all these different aspects. But most importantly, look at this. The Dow is down 455 because UNH, United Health, is down, had a round number low earlier on. Now it's taken that out. The low is 470. It's at 471 right now. Ooh, that bad news. Bad news, down almost 20%, down 114 at 470. So that is impacting the Dow. However, let me just go through this. The Dow is down sharply. As I said, Dow's down 490 points at 39,172. However, the S&P is up 13 points at 5289.33. The chart is not that great. In fact, this is where I usually draw in the two fighting patterns. One is the arch, it's the dreaded H, arching over, fading at a peak A or a B. That's a peak A right there, rolling over. But it hasn't, the day's young. It still hasn't given this deep move into the, let me just give you the exact figure that I'd be looking for, into the lower part of the candle of the 10th, which was at 51.15. So and it's trading at 52.90. That's a long way to go. Even yesterday's low of 52.20.79. Take that out in the next 2 days, and then you've got yourself the dreaded H pattern. Let's go on with the QQQ. 1, 2, 3. There we go. 1, 2, 3, not 4. Also got that arch pattern. Now, you see what's interesting about this? At this particular point, I would consider this more, because I'm a very visual person, I would consider this more as a rectangle. Yes, it's rolling over, but if it can stay in this range, and right now 444.78 up 61 cents, if it can stay in this range, it'll save the day, because, look, the MACD is rallying, it's positive. The on-balance volume is holding not too bad. The stochastics flat at 59%. That's not good. The relative strength is very good. And you've got the on-balance volume rallying, but not too great. But it's showing that there are buyers coming in. Those buyers will very quickly turn to sellers if we take out, days young, if we take out yesterday's low in the QQQ of 437.76. I guess I'll have to get my eyes checked. Okay, QQQ. IWM, Russell 2000, holding pretty nicely. It's up 93 cents at 185.90. Remember, Russell sometimes does that, holds a bit better, and then the next day pulls back while the general market tries to rally. It's just in its own world, and it's not a great world right now. It's really suffering. iShares Russell 2000 ETF. I'm going to put it together with the, let's just do that right now, XL Technical Friday, so I can go all over the place. XLF trading at up 20 at 46.72. After you look at that weekly chart, holding that beautiful trend line support, popping very sharply, I'm kind of impressed under these conditions that the financials are so far holding very well. Now, I'm putting it together. The only reason why I wanted to show it was of the KRE. The KRE is the S&P Regional Banking ETF, trading up 68 cents at 51.64. trying to turn around, trying to move higher. Had a question yesterday, is it time for the KRE? And I just said, it's very tough because it fails very quickly. It has a good rally, but then, well, look at this. When it gives it up, it just gives it up sharp. And I don't want to step in front of this particular freight train, not right now. I just need a little bit more conviction. I want to see JPM. Look at that. It's just kind of stalled at the 200 period moving average at 231.66 up 2.04. If JP Morgan actually can get to the 242 level, that's 12 points higher, 12 points higher by the end of, I would say the end of next week, but actually end of next week. So this is the week of the 17, and we're talking April. Yeah, we've got quite a bit of time to go. I'd say by the end of next week, the 25th. If we can get that far without taking out 225 as support, 223, that'll be a good sign. But I wouldn't rush into it. I don't see how you're going to get the regional banks to lead the market up. It'll probably follow. So I need to see the S&P Select Financial Spider. That's the XLF really leading the way. Okay, let's go on now. Did that. Oh, let's go to the SMHs. SMH, the Semiconductor Index, down 50 cents at 193.85. Remember, for years and years, you've heard me here, TFNN, talking about the semiconductors. They generally lead markets higher, and they generally lead markets lower. And this is something that you've got to respect. So in terms of the SMHs, the Van Eck Semiconductor ETF, you've got more than a one-to-one to the downside from the 283.07 July of last year high. And the candle, we've got a whole, almost 2 weeks to go for this candle. So let's see where this candle closes in the monthly. So far, it held the 200-period moving average and bounced off it. Gee, it's so important, these moving averages, if you use them in a certain way. And I always use them I ignore them until they hit a certain point, at a certain point, and then you got to respect them. So SMH is not good. So the SOXS, which is the 3 times short, had this huge move to the 54 area, plunged to 20, more than cut in half, and it's only running a little bit. If you're look at the SPXS, this is the S&P, went all the way from, we were long at 580, it ran all the way to 10.667. Look at it here, it's kind of stalling, even with the market feeling very heavy. So I'm looking at this, I'm saying, okay, when next would it be appropriate to go into not just the short position, but actually a multi, like 2 or 3 times short. At this point, I'm just holding off. I'm not going to be a hero here. I just need to see a little bit more evidence. All right, I did that. The XLK. XLK is the S&P Select Tech sector. Look at this. Dreaded H pattern, but it's holding okay. If it takes out, it's at 193.53 right now. Made a peak G in the weekly chart, peak E in the monthly chart. That's something to take seriously because that 9-period moving average has turned down sharply, but it hasn't crossed negative in the monthly, but it certainly has in the weekly. In the weekly, we went right to the 200-period exponential moving average, bounced sharply. If the XLK starts to trade under 180, I'd say 185 in the next 2-3 days, that's going to be a problem. I'll be back in a moment. Basil Chapman, Thursday, the 17th of April, and we're going to take a break, and I'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the Opening Call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Hi folks, we're back. So let me go through this because I had questions about it. So gold is now down 22. Not a big deal off the huge move that it just had. You'd expect to have a little bit of a pullback. 92% stochastic on balance volumes a little overbought. MACD is still expanding, very good. 9 is over the 14, the price is way over the 9. So I anticipate 3,300 to 3,290 could be a support if it starts to pull back here, just a little bit of a breather. If you're looking at the GDX, same sort of thing. Excuse me. I still haven't decided because the stochastics are 95%. If this is an old E or a brand new A, all I can say is GDX is down 95 cents at 50.96. If it starts to trade under 48, and these things happen very quickly. So if it goes under 48, that says, yep, okay, timeout. Just taking a breather right now. I don't see anything technically to say that it's certainly visually looks overbought, but technically it's just everything looks very good actually. Silver, SI, silver's trading down 57 cents at 32.41. Now, is it going to play catch-up? Is it going to have the 9-period moving average cross positive Monday or Tuesday? It really needs to do that. Plus, it's got the Chapman Wave inside track repellent zone. So you need to see by Wednesday of next week at least a test. I prefer a close, but a test of the 32.70 level. It's at 32.41. Right now, down 56. We'll see what happens. It might be that silver's lagging and it's not going to continue higher, but so far the technicals are improving. They're not great, they're just improving. Did that. I did Bitcoin earlier on. Bitcoin now is now down 300, just kind of stalling here, not doing very much of anything. Right on that Chapman Wave inside track. Look at this. You see these two lines right here? There's a diagonal line, and it's coming down very sharply, and you have a parallel little channel. So that I call the inside track repellent zone. Now it's gone above it, but it hasn't been able to close above it. So if at any point the Bitcoin can get, I would say not just above the 86,755 high of 3 sessions ago, it really needs to go into the, I think, 87. I think 87, I've been saying for a while, 87,500. And that'll say, okay, maybe you're turning the corner. Hasn't yet. Let's go to, there's a question there. So just together with the GDX, question about AEM. Look at this magnificent chart. So AEM, there's no other way I can count it other than this is an A. It could fail because it's such a complex pattern, but an A, all-time high, not an all-time high, but almost an all-time high, going to just over 125, trading right now at 121.39, down $1.15. This is Agnico Eagle Mines. I still only have this as a leg C in the weekly chart and a leg E in the monthly. Beautiful cup formation, broke out of it. Nice parallel move. Number of bars on the left equal from September of 2020 at 89.23. Comes down to 36.69. September of 22. 23. Wait a minute. Oh, yeah, 2020. I saw 23 there. 2020. And it comes down September of 2022, 2 years later. And then 2 years later, it just gets to that exact same point at peak D and then spirals high in a leg E. So this is a fantastic move. So I don't know what the question essentially is from Ilo. I would just say if you've been in it a long time and you've got really good gains and you haven't taken anything off, this is really the moment where you have an opportunity at least to do some money management. And with that money management, it means that you can feel like you're in command of the stock rather than the other way around. You say, okay, you've done very well for me. I'm taking something off just to reward myself and, as I say, money management. So there's AEM. Next question came in. Could I look at, where did it go? It was over here. FXI. So this is the China large cap iShares, trading up 32 cents at 32.73. Made a kind of a double top and a double bottom. It's trading in the middle of the range. So far it's making lower lows and lower highs, except for the last week or so, where it's had a nice bounce and it's actually holding the bounce. Now you see this, there's a technical Friday, so I'll get a little technical here. You see this W formation where the price deflected lower, the 9-period exponential moving average deflected lower. That could become a very positive W formation if the MACD, which is the histogram still negative, starts to cross positive and the FXI can actually start to trade in the 33.50 area. It's not much higher than 33.73, just 60, 70 cents higher. But if it can do that, rather than close under 32 in the next two sessions, and I think that we have to include tomorrow for them. I'm not sure they have Good Friday, going into Monday. Then another question came in about, do I see it right now? Yes, Palantir. PLTR, is this an opportunity to be buying Palantir? And I would just say, you remember we were looking at it the other day and I said it bumped into that resistance. PLTR is a symbol, 93.63 up 92 cents. It really is kind of stuck here. If you've got a very long-term positive bias on the homework that you've done, all I would say is I would still, if you wanted to get in right here at 93.67, you see what would have happened if we didn't have UNH, which now is down 21%, down 123 at 461.96 in 1 hour. We haven't even traded for an hour. In 1 hour, it's given back weeks and weeks and weeks. Let me just go to the low. That'll be the low right there. Right there. So let's go to the 3rd of February. Oh, that's not too bad. 3rd of February, 3rd of March. More than the 3rd of April. Nah, it's not good. So in one swoop to the downside, it's just taking that out. And, of course, it is impacting the Dow, as I said before. And now this is going to be very interesting. So Palantir, see if they do this one by one, it's a real problem. But so far, Palantir is holding okay. Is holding okay worth getting in? Well, the 9-period moving average flipped positive. The MACD is positive. The on-balance volume is not bad. Sorry, I keep saying the on-balance. That's the relative strength. Is not bad. The stochastics at 86%, over 80%. I like that, and flat. And the on-balance volume is lagging. In other words, the volume is not quite there. So what would I do? I tell you what I'm going to suggest. You've watched this for a long time. The way I'm looking at it, I see residual strength from 93 going into next week if, these are conditions, if it's able to pop above yesterday's high of 97.30, it doesn't have to close there, but within a day or two of doing that, it's got to take out for leg C the 98.99. It's got to go to 99 after that. And then I'm going to say to you, you might have something that could creep to the upside. I don't see it as being a spectacular buy right now. I'm looking at it, but I would personally leave it alone. But if you want to just get your foot in the door, maybe that's one way to do it, because it does often pop to the upside. I just don't see anything right now. I think it's stuck. It's got a lot of resistance at 99. I'll be right back. The Dow's down 555, and there's a...
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstad's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
This portion of the Tiger Technicians Hour is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
So the Dow's going down low right now, down 623. The S&P has now gone negative. It was up 5 just a moment ago. Now it's down 10. And the QQQ has gone negative. This is at 1020. That's where we want to see if there's new buying coming in. So far, it's just old selling. It's all day's been selling, and now it's continuing. So let's go through this because, let me see, was that a question that I had? Yes. Okay. So within that context, I want you to just look down to see. Yes. Okay. I haven't finished my overview. So there we go. Look, here's the bonds. U.S. bonds are trading down 8/30 seconds at 115. They're not breaking up or breaking down. They're just kind of stuck in this range, 114 maybe to 116. I want to see something more than that. I'd love to see the yields come down a little bit, just because it's just part of the markets, and it's not like it has to for everything to work. I just would like it to be something off the table right now. So with that said, I wanted to go to, did that. I wanted to show you something in the crude oil. So crude oil, you see this large, this is the MACD, the moving average convergence divergence. You see this low right here, the day before the on-balance volume turned around, but the stochastic actually started its turn. This is like the Le Mans race Grand Prix. It's this huge bend, and as you come out of it, you should accelerate through it. Well, the MACD histogram, the vertical lines, the 0% line is still minus 19. It needs to go positive. If it does do that, then crude oil, for the first time, I'm looking at it and saying, hey, this time we can have a bounce that could last a little bit longer. Why? Because if it goes above 64.30, the low that was made back on the 11th of March was 64.44. So as soon as it starts to go above that, you've got this fulcrum that says prices to the upside, prices to the downside, the midpoint line. If you can start to trade above it, that would be the first real positive sign to say, now buying is coming into crude oil. You've also got the 200-period moving average, which held its support back in September, and then got taken out 3 weeks ago. That was the end of March, I believe. No, the beginning of April, the week of the 4th. And that is at 63.72. So here again, if you're able to close above that, the technicals are still lousy in the weekly chart and certainly horrible in the monthly chart, but it's the daily. Remember, you can't go anywhere unless you get the speedboat, that's the daily, turning up to help the weekly, which is your ferry, and then the monthly, which is a super tanker, takes a long time. So this is a start. This is the first positive I've seen. I did mention this before when we were routing back around about the 15th or so of March. I said, this is a good sign, but looking at the weekly charts, I didn't think it could last, and it went to a peak D. Remember Chapman wave peak D? That's where other things can happen. And whoosh, it went from the 71 area down to 54. So this is the first sign that I'm seeing something in crude oil. I'd like to go to natural gas. Natural gas, NG, right on the 200-period exponential moving average after. Remember Chapman wave peak Ds? That's what your objective is in a buy signal to buy mode. That's what you got right there back in March, up just under $5. Let me open this up a little bit so we want to see it. So what we're looking at is the big arching over. Remember, this is natural gas gets smoothed over. So what happens is the chart, the notation, everything is just perfect. What isn't perfect is that the price gets smoothed out, so all my notation, it's not automated, I do every one by hand, stays up there until I bring it down. It's the same thing with stock splits. So everything here is pertinent, and you've got an arch formation. Where's the arch formation stalling? It's stalling right now. Let me do this. I usually do it, first of all, just on the penultimate low. So let me do this here from there to the midpoint, which is at peak D right there. And then I go click, and I see, are there the same number of bars from the upside to the downside? And lo and behold, it's to the exact time, but not to the exact price. And that just says very often when you miss on time and price, you're going to go further And that just says, all right, natural gas. So I have a natural gas stock that we have focused on for a little while. It's not natural gas per se, but it kind of uses that, and it's been holding well. So I'm using that as a clue to say, is finally, I mean, we already basically finished the winter, right? So what's going to happen here? All I can say is that there must be an abundance of natural gas. I mean, there just has to be a natural gas abundance. And if that's the case, you're not going to get any pricing power for a little while. What would give you pricing power is a move in the price itself, because you have to get the price to move up, from this area of 3.31 right now, the continuous contract. On a weekly basis, you actually want to see it trading in the 372 to 381 area. Wow, if it does that, that says, maybe now we've got a decent rally in natural gas. All right, with that, I'm just going to jump over to wheat. I had a question if I could do some commodities. Yeah, wheat is in a buy mode, not a very strong one. Needs to get to a leg D above the last high in the continuous contract. Right now, it's at 552.5, up 4 3/4. This is the level that we're looking at right there. If we can go to, on the continuous contract, if we can go to the high of the 11th, 556 3/4. If we can go to just 1/4 above that, starts leg D. Then I'm looking at an arch formation that says, now you can start looking at the left side high of 574 3/4. So, but the weekly chart says, lower lows and lower highs, not doing very well. All right, monthly chart is just ghastly for wheat. This is deflation, the way we're looking at it, surely. Now, let's look at soybean. Soybean right now had a huge move up from the, was that music that I heard? Music to my ears? From the 969 low, had a big move up to the 1,048 area. Now it's just stalling, but this looks like it's improved, and we'll go to corn. As we go to a break, I think we've got a break coming up. Corn is holding very well, and I think it should be going higher. Basil Chapman down 680. Am I right? Did I hear music or not music? Should I just keep talking? Let me see if Al, my engineer, wonderful engineer, also good going into the 10 game like that. Let's see. Am I talking because there's a break? No, I don't hear a break. So okay, I'll just keep talking away. There it is. I thought I heard it a little earlier, I guess. There's the music, folks. So I'll be taking a break. Dow is down 686. S&P's down 16. And we've got some questions that I will deal with as soon as I will. Congratulations, Jacob, on your uranium stock. I think that's doing very nicely. I'll be back in a moment.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds for both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Hi folks, so the question is, a couple of people asked, so the pattern that I was looking at now, Technical Friday, right? So I'm going to take it on Thursday, but we'll not here tomorrow, so we'll do it today. The question that I had is, am I anticipating that this chart is going to arch over? So this is the chart with my DNI, which is the Chapman Wave Dark News Index, using the Dow Daily chart. And the answer is that I've called this a residual low, and now we might have to restart something. So how this works in reality, now I don't like messy charts. Look, it held that beautiful support, and then it became really strong resistance. I just feel I need to take this away because this is not the chart that has all the technicals on it. It only has one thing, and that says that each chart, it used to be interest rates. For a while now, I've said no, it's other things, and then it became tariffs as a top, as a marker, and now I need to get rid of this. And if I get rid of this, all of a sudden it opens it up and it says, wait a minute, if this was your midpoint right there, why don't you draw in? And I'll do it because I only want to do what's relevant. Here I had a time sequence. I'm going to get rid of that as well sometime. I'm hoping to do my weekly overview today so that if you have time, then you can listen to it. That's for subscribers to my opening calls, my hour, sometimes a longer overview. It's almost like a webinar in the sense that I really go into detail about what we have, what we're looking at, what the markets are doing, etc. And I show some of the techniques involved. So look at this. So this here will be the price, number of bars on the left side, going from the August, I think it was the 5th low, to the high that was made right there. And that was at 45,073 on the 4th of December. Even though there was just a fractional miss over there, I'm treating that as the high, which it was. And now I'm going to go left side, right side, price, time match. And that's the midpoint. I love when you can use the midpoint as your, make that pink, as your fulcrum, as your plumb line. And that's exactly what we've got. So make that pink, there it is. And this is the trend line that we were looking at before. And that went straight down to there. Okay, yeah. And in this particular instance, what we're looking at is, the question becomes, have we made, is this actually an internal low and we're going to make a residual low? My suspicion is that if we actually take out the Dow 36,611 low of the 7th of April, that there's a chance we have to call that an internal low and we have to wait for a residual low. So I'm being we've raised cash. We have certain positions done. We've had gold just for months now. It's been fantastic. Today, I'm going to start considering whether we take another little bit off. We did get into a silver stock. It wasn't one of the greatest silver stocks, but we did get it. I'm using it almost. I don't want to, but if it fails, if we get stopped out, then it says to me, silver's probably not going to catch up to gold. And that it's a very isolated thing in the sense that the geopolitical, economic gold nugget insurance is really what this is all about, okay? So here's your big arch formation. We've taken it out. You had 3 bars in which to close above, and you did very sharply. Now you started to come back. But this is a chart that's being distorted because of UNH. So I need to go right now, as I'm talking about it, I need to go to the S&P. So the S&P, SPX.X, there it is. So here we go. The S&P took out from when it made that low of, what was it again? I should have remembered that. 5,062.25. Let me just type that in. 5,062.25. I think that was the 4747. Yeah, when we made that low on the 7th, we've actually arched in a way that says, hey, this is not too bad. If you look at the QQQ, 1, 2, 3, QQQ, arched over. So far, it's not too bad. If you look at the IWM, more like a rectangle, which you can kind of call it an arch, but still holding okay. So that said to me that the pullback that we saw this morning was maybe, we had profits yesterday in our UDOW 3 times long that we've had for a couple of days, and to go back. But this time with a pretty tight stop. This is no games right now, because either you're going to get a relief rally because the S&P flips to positive and actually closes towards the plus 12, plus 15 area today rather than minus 12. And you've got to get the QQQ as well, closing decently. So as I look at it right now, that to me, just on a very short-term basis, that UNH is a one-off. I'm thinking it's a one-off. Market is holding pretty darn well when you think about it. So I can go to some other questions because these are part of market-related ones. CTAS, Cintas, 228.12, all-time high the week of the 29th of November, plunges down to the 180 level, has a really good rally to where? To a double top. 212.70 was the top at the end of March. April goes a tad under it. I always look at these double tops and say, be careful. Even the Dow, yesterday I was talking about this. In fact, I spoke to, when I was interviewed by Jacob, I said, hey, this little double top, I've got to watch very closely, but I didn't know UNH would really tank the Dow. So at this particular point, CTAS is not doing too badly. And even the jobs report this morning wasn't too bad. So that's Cintas. I wanted to put it together with Marriott. That's what I usually do. I say, Cintas Corporation Uniforms Rentals. Well, let's look at Marriott. Marriott hit a high, 300 and, what was that? I think I've got the exact number, 307.52 on the 7th of February, trading down here at 219. That's telling us something. It's telling us about money that has to be used for necessities rather than peripherals, other things. I mean, surely, isn't that what it's saying? Look at the jets. So now you've got the 6,200 passenger ship that takes off, a cruise ship, takes off in Florida, I think it's Miami, 2,300 crew, 6,200. I mean, this is what I always look for. These are the excessivities that over the years, not the decades, I'm doing about 100 years. I've been going through history and looking at it, and major market tops are invariably made by excessivity. And this is almost a man-made I don't know if it's a recession, but a man-made slump that we've had with the tariffs. It looks like it, doesn't it? Anyway, I'll be back in a moment. Dow is down. Oh, it's come back a little bit. Now it's down only 623, but the S&P is only down unchanged. How about that?
This year has already been a wild ride for the market. We started off heavily in the red, traversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs? Trade wars? Analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento for the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are April 11th and 25th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey. Because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Let me just finish this up. So we had a question about ASA gold and precious metals, done fantastically. This V-shaped pattern that we're looking at now, we haven't closed above, well, we have, above the 31 high that was made back in the 1st of April. So let's just see what happens here, because we need, the 32s looks like resistance right now, and the 2930s is key support, is trading at 30.53 right now. It's done fantastically, but the stochastic and MACD are still all very good. So this still seems to me to be a place, but I'm also going to suggest here, take a little bit off. It's just money management says, hey, it's been spectacular. Take a little bit off, and you can always put it back maybe at 28 if it pulls back there. Then a question came in. Satish wanted to know about EZWP, but I can't tell if that's the futures or what. So I'm a little lost with that. I'm sorry. So as we're going to wrap up, and you're going to hand you over to Steve Rhodes, great programming here today. I'm wishing you all a happy Easter. Last weekend was the Passover, and we've got the Easter long weekend we've got. And I'm just going to say there's going to be a lot of news over the weekend, and it keeps coming in, bad news about the economy. When you think about it, the market, let's just skip the Dow for the very moment. The market has actually held up pretty darn well. So internally, I still see some strength. I'm not overly bullish. I'm very selectively bullish for our subscribers. But at the same time, we've raised cash, and I'm waiting patiently to put that cash to work. And if there's a really big rally, I don't mind going short it again, as we did before. So have a wonderful long weekend, and I will see you on Monday. Check out my Opening Call Daily Newsletter.